connect with the management of Dhanlaxmi Bank. Sajeev Krishnan is the part-time chairman and whole-time director of the bank, who now joins in on the show. This is on the back of the news that came in earlier this morning that you have 3 banks that have been removed from the PCA framework. Thanks so much for joining in. To begin with, do you believe that after the fund infusion that we saw, that the overall metrics for the company, or for the bank rather, stand in a better position, hence they have now been removed from the PCA?
I think that's not a relevant question for us. I believe you may have mixed it up. We are in the private sector. We have no fund infusion from government.
No, but the fact that you're coming out of PCA, that clearly means that you will be able to do both lending and borrowing activity normally.
That is correct. That is right. And in fact, the most important thing for us is we can plan out, redistribute our branch network, identify places where we can do better and move into such places. All of this was frozen under PCA. However, the PCA does talk about recruitment of people, and they have put a freeze on that number saying that we shouldn't go up. That's fair enough, because whatever retirements take place in the bank, at least that can be replaced. Under the PCA, we were not even allowed to recruit. So there are a few factors that will help us, but capital is certainly not one of them. Capital, we did raise subordinate debts last year, and we were comfortable on the capital adequacy ratio, which was about, I think, 13.5%.
Could you broadly tell me your current capital adequacy ratios, and for you to start lending, how is your capital buffer looking like for rest of the year?
Absolutely comfortable. We are 13.52, 13.5052 or so on the last quarter numbers. That is as of close of December. So we have no risk on that, neither on the core nor on the with the CCP. I mean the CCA also. We don't have a problem, so we are comfortable there. 13.52%. There is no plan to increase capital this year. Maybe next year we look at something. This year we're okay.
Closely, I just want to break this for a benefit of our viewers. You've come out of PCA, which means you will have to commit to certain timelines in terms of reaching where your book quality and where your NPA levels would be. Can you just refresh it for our viewers, that what would be that commitment and what is the indication which you have shared with RBI?
Well, some of the things that let me tell you first of all that we come out of PCA because we are above the thresholds of all the parameters that fix you into the PCA. So in terms of profitability, in terms of NPA percentages, all of this we are already better. Now it's only a question of improving on this. And also there are certain things that, other things like the net interest margin or the yield on advances of the employee costs, all of these things we have strategies and we have plans on which to do it. But we were never, in the last quarter, after December numbers, we were never below the threshold limits of RBI, particularly on the capital adequacy ratio and the net NPA ratio also. Net NPA ratio, just to refresh you, we were at about 253 crores or so as the YOY basis, and that has come down to about 173 crores. So that itself was already about 80 crores decline. And also during this quarter of December, the net interest margin, which is critical for most banks, I believe, did increase from 2.89 or so to 2.97. So there again, there has been something that has happened that is good for beneficial for the bank.
To close it up, Mr. Krishnan, since your book is small, what your percentage of credit growth and lending would be dramatically different than what the industry average is. What would be your sense once you start lending? What numbers you think you would be able to grow your book at in this year?
I think we are at the moment at around 56% on the CD ratio, roughly about 56% in close of December. And in the remaining few months, which is just about 1.5 months or so, I don't think there will be a dramatic change this year. And but we have been in the last quarter ending December, we did get into a few advances, which will definitely contribute to the bottom line, which will contribute to the interest income of the bank. And they may not be a real great addition to the numbers at this point in time, because, I mean, it's not going to happen that fast. Nobody will be looking for it and nobody is going to be sanctioning it at this time. I don't believe there is much of activity. This is the slack kind of season as banks gear up for the year end. And it may not happen, but we do see at least a substantial increase in net interest margins out of the net interest income that will flow in from advances. That is on account of advances that have been disbursed in the last quarter, up to December.
Right. Thank you so much, Mr. Krishnan, for clarifying, giving us the details of your current position. And it's that bank recapitalization that had helped shore up the bank's capital funds and increase their loan loss provision to ensure that these PCA norms were complied with.